All right. Welcome to the BMI Podcast, guys. Today we have a special guest. We have Tim Doyle, a local accountant, actually, entrepreneur, out on his own. You're in Cambridge, though. You're based out of Cambridge, right?
Yeah, we're in Cambridge. Our office is there, but yeah, we've got clients all around the country. So
Yeah, well, I suppose with your sort of job, you're not just stuck to that one zone, right?
yeah, absolutely.
Yeah.
Yep.
Thanks for coming on.
Yeah, thanks for having me. It's great to meet you and great to be here.
Oh, thanks, mate. Well, first of all, I guess give us and the listeners a little bit of a rundown, I guess, on your journey as well. You're an entrepreneur, I would like to call, like anyone that I see in business, on their own business. We all can understand the difficulties of it, and, give us a rundown on the start.
Oh, how long you got? I left school when I was 17 and joined the Navy.
Yep.
So didn't finish school, joined the Navy as a diver, thought I was 10 foot tall and bulletproof. Wasn't for me though. I like the discipline.
Just 10 foot tall.
Yeah. And then actually did a sport and exercise science degree based here in Hamilton.
Oh, wicked.
So moved here when I was 2007, 2008.
Yep.
So studied that. I was pretty keen sportsman, pretty fit and active, and that was kind of the natural interest. But got through the degree and was like, oh, what am I going to do job-wise or career-wise? And there wasn't really that many entrepreneur or money-making sort of roles. So
that's 2010, was it?
Yeah, finished in 2010. But during that time I was studying, I worked at Smith Sports Shoes, and the owner there I'd be selling shoes, right?
Yep.
And I'd be getting paid minimum wage, but I'd go sell a $300 pair of shoes that I knew for a fact that the boss had bought for $80.
Yeah.
And I was like, oh, I can do this. So I started buying products online and then selling them through Trade Me, and actually did really well, built up a couple of brands, built a couple of really good businesses, and managed to sell one of those off. And around about that same time, 2009, I think it was, I actually bought my first house as well. So as a 21-year-old.
Oh, that's a good timing then,
Yeah,
actually.
it was very good timing.
Yeah, straight after the collapse where everyone was saying the sky is falling.
Yep. So that experience at the shoe shop really sparked that kind of entrepreneur journey and how to make money, and sort of a mixture of property related stuff. So was up till midnight reading stuff online, up on midnight buying and selling stuff from China and packaging it up, and then after that sort of stint at Smith Sports Shoes, thought, all right, I'll go into accounting, and that was kind of the natural fit. So off I went and got an accounting job, and from there did my CA in 2015, went to London for a couple of years, did a really good stint over there, just traveling the world.
Yeah. Was it because you really liked the numbers side of things, or is it because you kind of got a taste of entrepreneurship, and then did you sort of see a gap or something like that you could help other business owners, or what was
not then?
Not then.
Certainly now, yes. But then it was accounting's the foundation of business though, right? It is the language of business. So just simple concepts, the difference between profit and cash, which so many people don't understand. But then it was, to be honest, the drive was actually to make money. And I thought that accounting and knowing that and being around business owners and seeing different experiences and stuff, that's what kind of interests me most. So, yeah.
Yes, thank you. Special delivery. You're all good. Yes, thanks. Good. I hope so. We've been doing it long enough. So you started off in the aspect that you wanted to make a bit more money, and you saw that more stable, or what was that?
And be a business owner, right?
Yep.
And accounting and everything I've kind of done has just been the mechanism of ultimately how to get there. Certainly the goalpost change, motivation and stuff definitely moves on.
Yeah.
But at the early days, that was a big part about it.
I think that might be good for your business as well, right? Going through those struggles and actually understanding what it's like in that starting journey, when you're probably onboarding some of your clients, you're like, mate, I know what you're going through. I've been there. Not been there, done that sort of attitude. It's more like, I know your pains.
100%, right? I think to be a good accountant, you need the technical skills and you need to know tax legislation and how it applies and how to prepare financial statements, GST returns, and those basics. But what sort of separates out the good and the really good accountants is the ability to build rapport with the client, know what they're going through, know what's top of their mind, sort of preempt their questions. And ultimately, like, I am a business owner as well. Like, we've got a team of 12. If someone tells me again, oh, I can't find the right person. Yep, I know what it's like. Or, hey, I've put together the system. Why isn't everyone following it? Yeah, I totally get you. So
that leadership side of things
totally,
as well.
Yeah, totally. So we've got a really good business now, and it certainly always hasn't been that way, but yeah, really stoked where things are right now.
Oh, wicked. How long have you guys been going?
Well, I bought it. So I came back from London and bought in as a partner in 2017. So we started with just 3 of us at the time. We built that up to around 14, 15 staff just organically. And then in 23, we actually purchased another business. And with that came another 9 staff. So there was me,
that another accounting
firm. Yeah.
Oh, cool.
Yep. So we had me and my business partner at the time. We had a team of just under 30 staff. It was a big business, big beast.
Wow.
But yeah, sort of things didn't really, I guess, like, I was always the minority shareholder. So things didn't kind of work out. We tried to reconcile the differences with the business partner. So about this time last year, actually decided to leave that business relationship and go out completely by myself. And looking back, it was really, really challenging at the time. But yeah, one of the best things I've ever done.
Did you pretty much like leave equity there sort of thing, or like it kind of ended up being he bought you out, or how did that sort of work?
Yeah, so what happened was, on one side of the transaction, I bought my clients from the business.
Okay.
But on the other side of the transaction, I sold my shares back to her.
Okay.
So kind of related for the same thing.
Okay.
But I had to buy a lot more than what my shareholding was worth.
Yeah. Okay.
But it was great in terms of like continuity.
Well, you would have been able to transition straight over, right, and hit the ground running.
Exactly. Same client, same team, same way of doing things, just a new name on the door effectively.
Yeah. The main name. The main name, your one.
Yeah.
You know, like, I suppose like that's something I don't really think about, how like, because that's almost the lawyer structure as well, right? How you kind of get brought in and then you're almost like the young one driving the business.
I'm not convinced on the name.
Yeah.
The business name before was actually Ag Biz Accountants, and that had a really strong kind of agricultural association, and it just wasn't me. Mm-hmm. So we ended up changing it to, at the time it was called Evans Doyle, but then for continuity of that split, it kind of, the Doyle had to, in my mind, kind of follow over. Otherwise, people weren't going to know about it.
Yeah.
But now we've sort of, we do a little bit of space in the crypto tax niche. But even that's got its own website, and that the rocket logo is the same for both. But apart from that, it doesn't really have the Doyle name on it. It's just called Crypto Tax NZ. So,
yeah. And like, so crypto tax. So talk about us with that a little bit. So you just went away to a conference?
Yeah, I was down in Queenstown last week speaking on a tax panel down there at Crypto Winter, so that was pretty cool. FMA, Reserve Bank of New Zealand, Bank, Sharesies, Easy Crypto, they were all there talking, so that was pretty cool. We've been in that space since 2017. It's a minefield. Crypto, 70% of crypto taxpayers aren't compliant, right, with tax legislation. So they've likely purchased crypto wanting to grow their wealth, but the mere fact of not being tax compliant, they're exposing themselves to interest, penalties, risk reviews, and audits. Yeah,
like talk about that a little bit more. Is that because like a lot of people aren't declaring their capital gains on a yearly basis, or for the investment? Because I know I do my S&P 500, and then that Hatch does that return basis for me automatically, because I invest passively, but with that sort of stuff, you can have real high highs and real low lows. Talk more about that.
Oh, well, crypto tax, there's kind of 3 reasons why people are non-compliant. The first reason they're non-compliant is because the tax legislation is really confusing. We're talking about something that's called cryptocurrency, but it's actually taxed as property. And we think about in New Zealand with no capital gains tax, but 99% of people who purchase crypto will be taxable on disposal.
Yeah. So there is no time limit like with property.
No.
So you kind of you bought that at 20 cents and you're selling it at 150,000. You get that full. Is it 30?
Could be
Or
as
it
high
could be
as
as high as
39.
39%. Yeah.
So it's if you purchase crypto with an intention to dispose, the proceeds will be taxable.
And you can't prove that you didn't have an
Yeah,
intention
because
to
exactly.
dispose, right?
Yeah. So like a car you bought it to drive you from A to B. A house, you bought it to live in or to rent out. But with crypto, it's intangible and it's digital. And up until recently, it hasn't really been able to provide an income stream from staking or something. So therefore, why did you buy it? It's only logical that you bought it to dispose. So that's where a lot of the confusion kind of comes in. The other part, it's really complicated, right? Like with a shoe shop, you can buy one pair of shoes and sell one pair of shoes. But with crypto, you can buy one token and then sell like multiple hundreds or thousands of that token.
Yeah.
And then you can have like hundreds of different tokens, thousands of different transactions on multiple different exchanges. And then you've just got a massive dog's breakfast that you need to unwind for tax purposes.
Geez, yeah, I'm just thinking about it right now, how you chop off a piece of it and then, but you've still got a huge gain on it.
Yeah.
And then does that make it value your current leftover at a certain amount?
Yep.
And
so it's pretty easy to see how it gets overwhelming pretty quickly.
Yep.
And
that must be fun for the team.
Yeah. But this is like, again, like the third reason why I think most people are non-compliant is because they're mistrusted or misguided. So like if you go to your traditional accountant to talk about crypto or you go to the investment advisor, you're probably met with like a blank stare or just no knowledge or like in some cases just outright judged.
Yeah.
So yeah, there's a lot to unpack. Like, around those concepts.
My opinion on like the crypto world is I feel like someone has to lose for someone to win. Like it's almost
zero-sum game.
Yeah, it's like a zero-sum game, and you kind of get frowned upon if you're kind of like, everyone get on board, because like, well, then who's cashing out at the end? Like, and you try to get everyone to join in with you.
Yeah.
There's still like, oh man, there's so much money moving around in that space. It's insane. I like to stick to property because that's what I know. I've got experience in that because I've got a few mates that are dabbling in it. But, you know, like I don't know if I could handle the mental up and down as well because like I would see them like, bro, I'm up big time. I'm, diamond hands. And then they come back and it's like, bro, we're down. It's like, I feel like for me, if I were to do it, I would do it passively. Yeah. I would just like
totally
forget about it, and just hope.
A really good analogy is like if you were to play in the NBA, how many points do you reckon you'd score?
Yeah.
You'd score like nothing against the pros, right?
Yeah.
But in crypto, people think that they can quit their job, study YouTube for 6 months, and then all of a sudden be
a crypto expert.
Yeah, and it's like, and like again, like if you think you could create an algorithm that could beat the market, surely like Elon Musk has already done that, right?
Well, people with a lot of money that could invest in a team that could build that, right? Like, yeah, I see how like a lot of. So then, do you have a lot of people and you're like, don't get into it, or or treat at your own risk, sort of thing?
Yeah.
Like you kind of want to be that person on their shoulder, going, maybe take some profits.
Yeah, so I think up till kind of more recently, we've been the ambulance at the bottom of the cliff. So people have bought crypto, made lots of money, then come to us for the tax advice and the tax cleanup.
Yeah.
But I think that is changing to be more proactive. But I'm never going to advise someone how to spend their money, whether that's shares, property, crypto, or whatever. I'm probably going to meet them more as like a sounding board to them. And like crypto's just got risk all over it, right? But it's also got massive opportunity too. And if you've got the ability, like you mentioned, to stomach those losses, to be passive, to remove your emotion from the outcome, there's certainly opportunities there for the future financial system of the world.
Yeah, that's just based on how I see it. Like I think you'd probably, in the long run, you'd probably end up a bit better if because there's the new ETF, Bitcoin ETF. Like I feel like similar to
far better tax wise as well.
Oh, okay.
Yep.
Yeah. You started doing a bit more content. So I started following you. I was like, when we first started talking, and then you actually, days after that, you were being putting out a bit of content. How's that been for you?
So if I just give you the backstory behind it, it might give it a bit more context. So
go for it.
I guess like it would have been 7 or 8 years ago now. I actually read a pretty influential book. It was called Key Person of Influence by Daniel Presley.
Oh, yeah.
And it was all about becoming the go-to person in your industry. So I guess I've tried to copy that model and actually implement it, being the go-to crypto tax expert, not the crypto expert, but the crypto tax expert in New Zealand. And part of that is there's really 5 key components. One is having a really good pitch about what you do and why you do it. One is publishing content, which we'll touch on, and the catalyst. Secondly, thirdly is having a good product. Fourth is profile, and lastly is partnership. So actually, earlier this year, I took it one step further and signed up for their mastermind program, which was pretty expensive, but that was the catalyst for launching this. And previously, I've been sitting behind the screen scrolling, and like I think it's something like 99% of people consume content, and only the 1% create content or something like that. So this year is more about creating a lot more content, putting myself out there a little bit more. I find it incredibly uncomfortable at times being behind a video.
It's tough, eh? People I actually have so much newfound respect for people creating content, and I used to think, oh man, like it'd be nice to not have a job and just create content. And then I'm like, now I'm trying to do it for my businesses as well, and then for myself and my personal brand. And it is hard. And like you just run into a brick wall sometimes. Like with ideas as well.
And we haven't quite got the strategy nailed down yet. Like it seems a bit extreme to try and just go crypto tax when we do all this other stuff and do a lot more around businesses and entrepreneurs and really helping business owners sort of achieve what they want as well. So I'm learning very quickly.
There's only one way to get better at it, right? And I keep falling into that same thing, and I've had multiple times where I'm like, oh man, like, is it even worth it? I'm not getting any engagement or anything like that. But I just look at these as the early rounds, and I need to be better by the time things actually start taking off, because then if it starts taking off and you're not actually built for it, or you're not honed into that skill, I feel like that's when you'll fall off as well.
And the cost to produce content, it's pretty minimal, right? Like I've probably gone a bit extreme hiring a video person and stuff like that, but like the cost of doing this podcast is pretty low cost, right? Or the cost of writing an article or talking in front of your phone about your ideas and putting them out there, like it doesn't cost you anything. But if you can position yourselves as that key person, or have a message that you can communicate that resonates well with your sort of target customer or anyone, that's massive.
Well, when I had Michael Wilson on, who I actually got your details from when I met him, we talked about it as well, how I think in the future, if you don't have like at least some sort of part about you on that online, so people can actually come and see, oh, he seems like a good bloke. And not just business. They sort of see a little bit of your background, and then they go, okay, I'm going to do business with them now.
Totally.
Versus, I think a lot of people were just, New Zealand's good for the word of mouth, but the world is changing, and we are living in that attention economy, right?
And I think as well, like previously, the assets of the world or of the economy, like ages ago, they used to be like livestock, land, agriculture. Then they moved to industrial revolution, where it was like all about machinery and operations. But in this day and age with AI, like the assets of today is media, which is you creating your own now, code, email list, all these sort of digital and tangible products, which like can literally be picked up and moved anywhere in the world across any jurisdiction, which is massive. Not only like for wherever you want to live and wherever you want to run your business, probably also for tax as well, because there are tax-friendly jurisdictions that, like our 2 biggest clients have left this year. They've gone to Dubai, and they were paying probably the same tax as 90% of all of the rest of our clients combined together. So
it's one of those ones where we could probably even talk about that. Like you're probably one of the few people that get to look behind the curtain, and you probably have your finger on the pulse. I like to think I'm good at having my finger on the pulse with property, but like you get to see the businesses, and you can, and me and my mate who I do the podcast with as well, we always talk about how like everyone goes, oh, you're in business, you must be killing it. Or it's quite the opposite. You're struggling to try and build a business if you're trying to grow and expand, right? Like what's that like seeing behind the curtains?
Oh, it's very privileged.
You must pick up so many tips.
Yeah, you do. Yeah, absolutely. And that's a big part. Like, it's like all these thousands of learnings where I don't have to go through it myself. I can just see what other people have done. So it's been massive. I think the biggest realization is that you'll have someone come in and maybe they're in the latest Range Rover, well, maybe not Range Rover, but well, that too, but say a Ford.
Ford Ranger.
Ford Ranger.
The classic tradie vehicle.
And it'll be ticked up. They'll be 20 grand behind on their GST. They will look and talk the part, but under the hood, they're week to week. They're battling with their business. They've got no core product. They've got no leadership, and they're on a really shaky foundation. And then you might have a person walk in t-shirt and shorts. He's got all the time in the world. He looks like Joe Bloggs down the street. Wouldn't even take a blink an eyelid at him, and he'll be worth 20 million.
Yeah.
So
it's one of the things I love about New Zealand as well.
Totally.
We do have a lot of good, humble dudes killing it, and you just wouldn't have any clue.
Yeah, absolutely. So, but not only that, but the people with that look the part, they're really demanding and really needy. Whereas the people who actually have wealth, they're just cool, calm, relaxed. They're just nice people as well. So it's interesting to see. I think the other thing, like, I know you're in hospo a little bit with the coffee stuff, but like hospo and retail in New Zealand, really tough, really, really tough. Like not only in this current economic environment, but generally speaking.
That makes me happy though. Do you want to know why?
Because
I'm growing. No, because I'm growing in a market that you're saying is quite tough.
Absolutely.
And that makes me proud. And I always tell my partner, like, we're hiring. We just hired someone today.
Awesome.
Like, we just went out and had an interview. We're hiring, and we've hired 2 in the last 3 weeks. We're at an all-time low in jobs, and so that actually makes me proud. You know, and it is hard, but which makes me even more proud, that we can actually be growing in this kind of market.
Yeah, and I think again, the really successful clients who I look up to as well, they work. They're not just on the grind in the day-to-day tactical side of their business. They've moved themselves up to work on their business or out of their business at a more strategic long-term level.
I need my partner sitting right here, because this is what I'm telling her. We need to be in that position, and that's why we're hiring, because we're trying to we do no marketing on our business, and we've been growing twofold. We're not going to get twofold this year, but every year in business we've doubled. And I said to her, imagine if we actually put in some effort into actually acquiring a client. Sorry to interrupt. Yeah, so your clients that are working on the business.
Well, yeah, that's just that's probably been one of the biggest shifts that I've made over sort of the last 4 or 5 years, right? So you think in my industry, you think about being an accountant as being accounting, and then you think about being an accounting business owner. It's just more accounting, but it's completely different, right? Everything that kind of got you to where you are, you need to learn to let go of.
Yep.
So previously, everything kind of circled around me. I was quite a bit of a control freak. I wanted the final say, but that keeps you stuck right at a level. And
I feel that's a lot of business owners, especially
100%.
if they're building their own baby, right?
Yeah, because it in some ways it reinforces yourself, right? But you've got a cap on where you can get to, and in our business that might be 6, 7, maybe $1 million of fees if you're doing it really well, but that's not going to get you to 2 million.
Yeah.
So what I had to do, and where I think other people listening can learn, is that through that journey, you've got to change the way that you do things. And for me, what that looked like was I need to let go. I need to let someone else sort of stand on stage and take the spotlight, because I can't keep doing everything. Otherwise, there's only one of me. But now I've got a team of 12. They're fantastic. And we've got people playing to their strengths in the right seat, all doing great stuff.
Yeah, and I have my mate that is normally with me, and I always sort of tell him, it's like, bro, you're really good. He's a nutritionist. He studied sports science as well, and he has his own nutrition business. And I say to him, I was like, you're so good at it, bro. But imagine if you could train 4 or 5 more people, and then you can help way more people. And that's how I would say to him, I know that you probably think that you're going to lose a bit of, I guess, personal touch, or they're not going to quite care as much as you do. But that's when I sort of say to him, it's up to you to actually train your staff to care as much as you do, or find the right people that suit your business and how you want to take care of your clients, And it was it's like a paradigm shift you have to come in your head, right?
Yeah.
How was that? Like, how did you?
Oh, it's not like something that happens overnight, right?
Yeah.
Like I'm a big reader. You read about it, you you listen to podcasts about it, and then you think you know everything about it, and you're like, oh, yep, this is easy. But a bit like swimming, you can watch some videos on swimming or read a book about it, but until you jump in the water, you've got a shit show. So
For sure.
So you try things, right? You see what works, you see what doesn't work. But I think also it starts with like a really compelling vision. And I know for me it wasn't. And it's a series of small steps. So the first step for me was being off the tools in terms of processing, being off the tools in terms of some delivery, being off the tools in terms of delivery, and then on the tools in operations and sorry, not operations, but in terms of marketing or systems or finding talent. Because like you said, if I can find one person or two people to do what I do, well, it's 1 + 1 = 10 or so. With our team, and then the other thing is, or that we've been focusing, well, I've tried to focus on, is that if you can be that go-to person in your industry, well, then everything else can kind of take care of itself to an extent. Obviously, you still need to manage those, but if you've got sort of the ability to influence in that space. Like a better analogy might be Usain Bolt won the gold medal at the London Olympics. Do you remember who came second?
No.
Yeah. So if you can
Being
be
the top.
if you can be that go-to person, then it generates a lot of demand. With demand, then you don't necessarily constantly have to worry about the other stuff, and you've got time and resources for it to build.
I definitely think you're onto something. It's a good timing with the crypto because there isn't much clued up minds, I think, going on with that space with the crypto, and a lot of people, like, I think that was the vision that was sold. Don't pay tax. Like it's they can't monitor you, whereas actually everything's on the blockchain, right?
Yeah, exactly. But I think too, like that certainly, again, like I've been doing that since 2017, and it hasn't been easy. Like,
yeah, I bet.
But in some ways, like personally, I had a tax problem, so it's all started with me solving my own problem, which I think is how more people should start businesses. Because if you're the customer as well as the one providing your services, you know exactly what it's like.
Yeah, you know what the pains are.
Yeah, and then we've seen with crypto these markets as well, and there's been times where that was the catalyst for us buying this other accounting business. We thought that crypto had just sort of declined 80% in value. We thought the market might be dead and we might not have anything to do, so or the revenues might drop. So that was part of our thinking behind buying this other business at the time. So it has its ups and its downs, that's for sure.
Do you have like a lot of your team specialists as well when it comes to the crypto tax, or do you have like a portion of your team that just deals with the rats and mice, like the bread and butter?
Yeah, so I've got two specific crypto data analysts. They're great. One guy's been with me for 5 years now, really switched on, knows the markets, really good, personable skills with customers as well, and trained them all along the way too. So I've got those two specific crypto guys, and then we've got 6 senior or chartered accountants. So once the crypto specific side's done, it's then passed to one of the CAs for more of the tax side of things. And then I've got a really high-end sort of personal assistant receptionist who does a lot of my email management, new client inquiries, that kind of stuff too. So she saves me like 20 hours a week, which is awesome.
Yeah. I need to get one of those. Because I'm doing the podcast, I'm doing my own content and doing my development and the coffee garden.
That would be like, funnily enough, we only actually hired her recently, but if I was going to business again tomorrow, that would be my first hire.
Yeah, really, just to alleviate that pressure for you.
Oh, massively, because like everything's inbound on emails these days, right? So I could just sit on my emails and reply to one email and the next one would come in, but she'll just be a magician and I just check it a couple of times a day.
Yeah.
So.
The one, did she like just bring things that you probably want to check over before she goes and does the reply sort of thing for you?
Oh, she drafts the reply for me.
Yeah, that's
and
it.
just leaves it sitting there, and very rarely I'll have to change something. But I just there'll be, when I get back to the office, there might be like 15 emails just that are ready to go, and I'll just check them in. Yep.
Oh, that's beautiful.
Oh, like
you
awesome.
To have something like that is a blessing, I think.
But it's not only her though. Sorry, it's all of the team as well.
Yep.
Like they've all like contribute so much, and
Well, it's a team effort.
Totally.
Yeah. Do you have many people come to you for buying businesses? Like what's the space looking like for that? Like, is it because we're getting an aging population? A lot of people don't have heir to hand it down to, or a lot of them, the kids aren't really interested in some of these mum and pop businesses nowadays.
Yeah, we haven't seen so much probably as what the media make it out to be, but it seems like it's coming. We work closely with a couple of brokers in town here, ABC and Link. So they're like
they're
real
the main
estate
two, right?
agents for businesses.
Yep.
So at the moment we've got 3 or 4 clients buying businesses, sort of anywhere from a couple $100,000 up to maybe 4 or 5 million.
Yep.
All different industries as well. So one's in the wedding industry, one's in sort of the cleaning, but beyond cleaning, but that's probably how I'd categorize it. A couple one in the engineer and one in the housing building space. So that's something I really enjoy, because I think sort of all of my background around business tied in with the accounting is really powerful. And also, again, you'd get people surprised at how businesses might look on paper compared to actually how they perform, and what the bottlenecks are going to be, or what the issues that they're going to run into. So having conversations about those, but you probably have seen this when people buying houses, they put on their emotional lens and just get tunnel vision, and
or they think they see a business that I can turn that around, or something like that, and they'll buy maybe a negatively geared business or something like that, and it's like, no, with the intention to turn it around.
Yeah, but like you said at the start, right, business is hard, and there's a lot of our clients who would have been better off going to work for minimum wage at a supermarket or a petrol station, or just work 9 to 5, go home, switch off, like spend time with the family, not have a million and one thoughts going through their head, and just actually like live their lives. So there's particularly more so than ever now in this economy. There's a lot of pain out there. There's a lot of liquidations. ID's been incredibly forward and pressing. So it's not for everyone.
Yeah. Well, like, I definitely want to talk more about that, because a lot of people, I guess we glorify entrepreneurship, but I actually say it's not for everyone. I try to encourage people. I was like, hey, if you've got a good skill, if you're good at sales, or if you're good with computers or something like that, you can go and get paid 120K for a weekly paycheck. You get to clock off at 5 o'clock. Your work doesn't follow you. There's a lot of it that you hold on to being an entrepreneur. And talk more about that. Like, what are you sort of seeing in the space right now, especially with the economy being quite stale at the moment? I wouldn't say fallen, but
I think like just I'm probably used to it now.
Desensitized to it.
Yeah, but look, even the stuff that I mentioned last year, you'd wake up at 1, 2, 3, 4 o'clock in the morning with thoughts going through your head, or so I can totally relate to that as well. What's happening in the economy right now is that basically demand's dried up.
Yep.
So when supply is there and demand drops, prices fall, and what we're seeing is that those businesses that went through a growth period from COVID, which the economy boomed through COVID, the government was printing money. But those that continued or tried to continue on that growth path have, or those businesses with their balance sheets that are loaded with debt are really struggling. So firstly, growth's really expensive. So to grow your business actually costs money. If you even want to hire a staff member, quite often it might take them 2 or 3 months to get them up to speed. And then also during those 2 or 3 months, you have to pay for one of your existing staff members to train them up. So you lose the lost productivity there as well.
Yeah.
Or, and say a tradie business, you might have to buy a new van, you might have to kit out the van, you might have to, again, train them up as well. And all of a sudden that's cost you 80, 90, 100 grand in OPEX or CapEx to grow. So definitely those businesses that have a lot of debt on their balance sheet. So what I mean by that is that they've basically bled the company dry to use the cash flow on personal use. Those are the businesses that are struggling. So some clients took the small business cash flow loan back over COVID and are still repaying it or drip feeding it off. Other clients,
was there an interest rate on that?
Yeah, there is now. Yeah.
So like when
so it just compounds.
Certain amount of time they
charge you interest.
Yeah. What are those rates sitting around?
I think it's around 6 to 8%.
Okay.
Yeah. Yeah,
which is not too
be
bad
higher
for
than that now.
business loan.
Yeah,
wise.
but the question is, should you still have that loan from 3 years ago?
That wasn't the intention. Was for you to get through that 2 to 3 year period.
If you've taken that money and used privately.
And when you look at their books for the last 2 years, you paid yourself $200,000 or something like that.
But on the flip side, though, like this is a time where the experienced, wise business owners are actually doing what they're not doing. I wouldn't say they're doing well, but they're capitalizing on strategic opportunities.
Yeah.
So those businesses that have cash buffers, that have been putting money aside, that aren't paycheck to paycheck, that have no debt on their balance sheet, well, they're able to pick up those other businesses that are in distress or closing down and pick up their customers like really easily. So
I think I see that with us and the coffee business because we've been operating for so long, we actually are picking up the gigs that these guys have just sold their carts because they couldn't get through it.
Yep.
We're picking up those little bits of business.
Exactly. Yep. So that's a good example of that.
Yeah.
Yeah.
Cool. So you said you've done a bit of property actually. So let's talk about property. That's my favorite topic. But so how long are you? So you bought your property when you were a bit younger?
Yeah, so I bought my first place when I was 21. It's pretty quickly after that. We actually got up to having like 7 or 8 rentals.
Wow.
Just at the time, me and my partner at the time.
Yep.
I was going to all the property seminars up in Auckland with GRA, or they brought a few people over. And done a few developments, done a few subdivisions, sitting on a section at the moment with Wilson that we can't sell,
I think I've heard him talk about
really
it. Is
well.
That the one that you might just break even on sort of thing? Or
that was the subdivision development we did down in Kiki.
Yeah.
We bought a section at a mortgagee auction. I think Wilson bought it.
Yep.
We bought it really well, but just haven't been able to sell it just due to the banks cracking down on finance for new builds and due to the location. I love property. It's a way to really leverage and get ahead, and that's what I like about it, particularly coming from that numbers background.
Yep.
And obviously the ideal for me was, or sort of the goal at the time, was to be able to buy these properties and have the tenant pay off the mortgage and ultimately get a passive income.
Yep.
My views on that have since changed quite significantly, but that's definitely at the start what got me into it.
What's it changed to then?
Well, now I guess I'm not getting married and having kids. I'm not probably don't have the same risk appetite as what I used to.
Interesting, yeah.
Yeah, so for me, it's about paying down debt to a very, very comfortable level. But more so now, it's probably a little bit about diversification as well. Mm-hmm. So we sold a property actually a couple of months ago, and we're going to sell another one next month too, and look to more S&P 500 sort of diversified.
Oh, really?
Because it just doesn't make sense to have all of my equity in the business and Waikato, and then all these properties in Waikato. Like everything's just centralized right here in property in my business. So it's actually about just getting more exposure elsewhere as well.
Yeah, fair enough. Like I don't know whether it will be for you, but like I know I'm probably going to run into my ceiling where I have to go and make more money if I want to go and borrow more to acquire more property, even though I'm sitting at quite high equity. It comes to that point. I think in New Zealand, like there's ways to do it, I think, but it's just like, diversifying probably is a smart idea.
Yeah. I think the other thing with property too is that, again, it's one of those sort of concepts that you hear about people making lots of money in property all the time. I bought it for this amount and sold it for this amount over 10 years, and the properties always goes up. I think just a couple of views on that. One, we've seen since COVID, property prices have gone down, and so many people are in a negative equity position, and that's kind of a little bit unprecedented in a way, maybe in the GFC, but not so much towards first home buyers now. Secondly, that I think if you're going to make money in property, your ear needs to be really close to the ground. You need to be an expert in property. And I'd rather be a business owner focusing on my business than trying to chase deals in property. I can't do both, right?
Yeah.
I'd rather just do one really well So rather than dipping my toes into the property thinking I can do it on weekends, no, I want to use the weekends to spend time with my family, rest and recharge. Whereas I think there are opportunities in any market, but you need to dominate that market and become an expert in it and just live it and breathe it and know numbers off the top of your head, like you probably do.
Yeah, well, I used to sell real estate, so I used to work for Lodge. Yeah, so and it's hard too. Like, I think you can get there as well. Like, I think it's probably the one thing that you can put a bit of time into it, like you have done in the past, and become, I guess, your own sort of, not expert, but at least you can know the right red flags, or like you can actually pick up on some stuff, because you make a good point before, like there's people getting burnt, and maybe it doesn't show through, and this is probably, I'll answer, I reckon it doesn't show through. People aren't talking about it and banks aren't losing out, because it tends to be, the drop always tends to be around their deposit. So then they're actually just walking away from their deposit, but the bank always ends up getting their money back. Yep. And I don't think they're reporting a lot of the stuff now, because a lot of people actually go, man, like talking ill about property, but they lost their deposit. But the bank actually still, like, I always say the bank always wins. Like, that's why they lend you money. Like,
yeah, well, that's why they make the most money in New Zealand. Yeah, absolutely. And I think too that it's quite a shameful thing to talk about too, right? Particularly if it's a lifetime savings or something like that.
Yeah, it's a good point. They shouldn't be. Like, I think
no,
a lot of
absolutely.
people need to learn from some. I think learning from other people's mistakes is a huge thing that you can have.
But I think the other thing with property, and this is, I remember, nearly 20 years ago now, when I bought my first house, I was of the belief that property prices would keep going up. And look, they very much might continue to do so. But if we look at what's happened between the income ratio to property prices, that gap is just getting bigger and bigger and bigger. And already in New Zealand, I think we're seeing this more divide between the rich and the poor and the middle class, and with inflation going on. I just don't think that that's going to continue. And I think if it was to continue, and look, I could be completely wrong here, I accept that, but I think if it was to continue, we're going to see more of a political interference with those markets. And I don't think that will be good, but I think that's a possibility, because ultimately, I don't think that New Zealand, if house prices were to double again, I don't think that's going to be a very good New Zealand.
So I completely agree. I try to tell people, because I'm all in on property. I have quite a few properties, and I'm doing 5-unit development that I'm holding on to all of them. And like, it serves me for the prices to go crazy like last time. But I always say to everyone, I don't want that. Like, I want the interest rates to stay at a reasonable level. If they come down too low, I'll be worth multi millions. But it doesn't matter to me, because the economy will eventually collapse, I think, as well. If we go through that again, it's going to hurt a lot of people, and then we have the same problem we already have now, where a lot of these people aren't getting into their first home or anything like that, and with the debt to income ratio as well, it can be a huge problem with business. And I think New Zealand needs to make a shift towards business, I think, personally, but I feel like the government isn't actually helping much businesses. Like, I'm having probably a talk once a month with my partner, going like, I know, like, because she thinks it's not worth it, because we're just paying GST, we're paying taxes, it's just crazy, and we're putting in so much effort, and we're also creating jobs, but we're like, there needs to be some sort of, I guess a tax benefit or a tax break for a lot of these companies that are providing, wages for families, like we need to have some sort of push towards that. What do you think about that?
Oh, I think a couple of things. I think for those that are creating, just genuinely speaking, whether that's creating properties, whether that's creating jobs, they should be rewarded for doing so. And that's probably from market conditions, right? In terms of a free market, you're taking a bit of land and you're chopping it up into smaller places and creating new titles and then creating new houses. I think that you should be rewarded for that, or taking the risk to do that. Same for starting a business. But I think, but I also think that, I agree with you around the complexities of the tax. So just to give you an example, it is crypto related, but it could be equally property developer related. That we had a client that started with $100,000, made $1.5 million in crypto. Pretty impressive.
Yep.
They then lost it all, and then they ended up with 100 grand on the other side. So they've started with 100 grand, they've ended with 100 grand, but because they made the profit before the loss, they've got a $750,000 tax bill that's outstanding with 100 grand with IRD.
Yeah.
So they've got no economic value here, but they're in negative equity because of their situation. And
that's what can be real hard about the crypto space as
well,
well.
it's
right?
kind of the same.
Property, yeah.
It's the same for a property. Like if you made $1.5 million from a development, then did another development and lost it all because you took the $1.5 million and reinvested it over. There's a few more nuances, obviously, but I'm not too sure. So that position is legislatively correct, and we're not debating that. That's how the Income Tax Act works. That's how it applies, and that's the right answer according to legislation. I'm just not sure if it's what legislation intends or what we kind of want for New Zealanders, or is it fair, is it moral? And arguably this individual has had no economic gain. I don't think that they should be left with a negative equity and owing the IRD $750,000 that they've got absolutely nothing to pay it with.
Yeah, and then I feel like it almost leads him down a path of taking probably more risk so that he can try and come out at zero on the tax bill, which is that's an interesting thing to think about when it comes to that. Like, what can happen though? Like how, and then it almost promotes people to try and fucking not pay taxes. Like, try and like declare
again,
shit.
This is why the crypto tax is a bit of a minefield. And look, in an ideal situation, he would have taken out the cash, put it aside in a bank account before he went on and lost it. But the reality is this is that difference between cash and profit and the timing differences. And to put it bluntly, the rules are pretty complicated.
Like, is that sort of similar? You know how over in Aussie right now they're trying to do an unrealized capital gain tax? Like, is that sort of similar to that? Like, you kind of, like, let's say this property's worth $1 million, and then they're trying to charge you an extra 33% on that,
on the gain.
But on the gain, but I bought it for 500, so make it clear, like, it's it's only 33% of that, but you actually haven't even sold the property to get the money. Like, what do you think about that? That was an insane policy that I thought that just can't work. Like,
I agree, it can't work. But the benefit to the government is that they get their tax revenue quicker, or they get it much earlier, right? So they'd get it now rather than having to wait for you to sell the property. So I think the debt in New Zealand's going to reach like $1 trillion in 2030 or something like that, and that could arguably be used. But the issue with that policy is that how are people going to pay it? They can't. So they're going to sell down the asset. And if those assets are, say, I don't think it would be the personal house, but particularly if it was a income producing asset, whether that's shares in a business or something like that, then how are they going to, like, they're going to have to sell down assets to pay the taxes. And the other thing is, like, say I buy some shares in the market, whether that's Air New Zealand, like I would have earned that money, paid taxes on it. So it's after tax money that I'm investing, and now you're going to tax me again on it? I'm like,
it's a tough one, and I feel like I think no matter what side of the lane you're on, they're all too greedy for our for our money that we work hard for. And I think when you're in business, you know this, like, and you see this as well. Like, there's some people absolutely stretching themselves, and then they're just in the hope that they're growing an actual value in their business, and they're not even taking money, but they're still paying taxes for all of these staff, GST, tax for the business. It can be quite hard. I don't want to be doom and gloom or anything like that.
So I kind of see the tax as kind of the rules of the game. So business is the game, the tax legislation is the rules of the game. So if you're a bit like Richard McCaw playing rugby and you know those rules really well, you can play to your strengths on them. And you can create a plan, have systems and processes in your business to get around them, or to really push them to the extreme if you want to. So I think that a lot of this actually comes down to good understanding of them and really good systems and processes. So that's what we do with our clients, is that, and no one teaches you these kind of rules as well, right? So I think that once you actually know them, you can actually play them to your strengths, prepare for them, operate the business. But like, you can't have this combined business and personal. You need to think of them completely separate. And rather than being a tactical operator builder, you need to think of yourself as a businessman who just happens to own a building company.
Yeah.
Or so it's a different mindset. It's a different. So I get what you're saying on one side, but on the other side, I'm like, well,
you can learn how to
exactly
bend it to your will if you have the know-how. And I feel like that's where someone like yourself would probably come in super handy for the non-trained person with what they can, I guess, depreciate, claim on expenses and whatnot. I bet you probably have a few people that have done their own accounts, and then you're like, mate, you can't put that through.
Yeah. Claiming things like haircuts or stuff. I'm just like, no.
Not if you're a real estate agent?
No.
Well, what's one of the, give a little tip. What can you, what's one thing that a lot of people wouldn't know that you can probably?
Probably like the big three. The easiest ones are your motor vehicle. If you're using your vehicle for business, then that's an easy one. Particularly if you've registered for GST and you operate as a company, there's a way that the company can claim 100% back of the GST and all the running costs.
Yep.
So that might be like 10 grand a year if you're doing a bit of travel, plus say you've got a $30,000-$40,000 vehicle. That might be quite a lot of GST that you can claim up front on it too, as well as the depreciation.
Yep.
There's a bit of a shareholder motor vehicle. I won't get into the technical. But yeah, so your motor vehicle. The second one is a home office.
Yep.
So you're using part of your home as an office for your business to earn
home.
income. Exactly. I've seen it all around me. So you'll be able to claim a portion of all of your household running costs to your business. And I think like another easy one is just your phone, right? So these days, like you're on your phone, internet banking, apps, messaging, coordinating phone calls with a team.
Yep.
So that's just no brainer to claim as well. So those are kind of really three easy expenses to identify. But if we just zoom out here, probably the biggest one to get the most tax savings is actually structure. So by structure, I mean, are you a company, sole trader, partnership, or trust?
Mm-hmm.
And they all have different tax rates and different reasons, and it sort of combines a bit, not just from tax perspective, but from risk perspective, from succession, from splitting income, utilizing lower marginal tax rates between different partners.
Yep.
That's where actually you can get the big tax savings from. So what we do is not only do we review the structure, hey, is this fit for purpose based on where you are and where you want to go, but also the expenses as well. And this sometimes comes across to properties too, or where you've got debt that's not interest deductibility. So if you've got a big mortgage on your own home, the interest on that isn't deductible because it's a private asset.
Yep.
But if you've got a rental property that's has no mortgage on it, well, hang on, it's the wrong way around.
Yeah, you need to move the
so we got some tools in our toolboxes to restructure that and get things tax efficient.
Yeah, awesome. Well, like it sounds like if you guys have any accounting queries, well, come to this man. He's got you sorted. What does the future look like for Kiwis when it comes to this economy? What do you think? I'm quite optimistic. I think we are going to come out of it, and I think where there is, I wouldn't say plenty of business to go around, but I think some of the people that really get after it, this is a time to grow. I think this is a very big opportunity for people out there wanting to get in at a reasonable price, I think.
Yeah, I think a couple of things. One, I think AI is going to be a massive disruptor around the world, right? Like we've seen it in our business already. We're external tax consultants. Now we can use AI, not just ChatGPT. There's some specific accounting ones.
Yep.
But as far as the economy, for those that are already in business, they need to focus on profit, being profitable, building a cash reserve, building a cash buffer, and managing cash flow. I don't think now's the right time to grow unless you've got your house in order. I don't think now's the right time to be taking on debt, taking on risk with all of these massive plans, unless you've got previous experience and backing, or unless you've got cash to do it. Yeah. So if the business is currently like break even, making a loss or something like that, I just focus everything on turning that corner and getting that business profitable. Looking forward though, there's always opportunities in New Zealand. We're such a small country. It's really people in New Zealand just get on and do stuff, right? Like we saw that over COVID. We saw the opportunities from COVID. History has these cycles, and we always come out the other end, and there will always be something new. We just don't know what it is yet, but that's incredibly exciting. Yeah,
I think you have to be. I think being negative doesn't do any good for you anyway, so that's why I thought I'd start with that. Hey, I think we're heading in a positive direction, because I know we are, but I feel like you get some people that kind of they're chewing off
it's
your
a
ear.
delayed effect though as well, right?
Yeah.
So normally we've got two types of clients. One that call us exactly when things are happening. Awesome, we love them. We can pull levers while the plane's still flying.
Yep.
But if the plane's like crashing, man, we don't have many levers to pull, and sometimes it's too late.
Yeah.
So this is the difference between being proactive and being reactive. And if you can work with advisors who are proactive and take ownership and responsibility and accountability, then there's just more ways to fly the plane in different directions and different turns and go up to a different altitude or go down where there's less turbulence. So, but if it's too slow, then it might be too late.
Yeah. Like maybe that's an ego thing as well. Some people not maybe too ashamed, and they probably even told some of their partners that they've been floating in the red for how long. And if you brought it to you, like you sort of say, if you actually bring it to you earlier enough, you'll be like, mate, I could have got you out of this.
Exactly.
But it's a little bit too late now.
Yeah.
Hindsight's always a bitch. Yeah. I've got a property tax question for you. And it was something my lawyer queried me about. So I've got 4 sections, and I'm just going to ask it. I might be able to help someone here because they might be thinking about doing some of this. And I'm looking to either one, sell them on or do house and land packages on them. She was worried that I had a GST. I was exposed to a GST position, but I said to her it's going to be in my private name. If I was to do the development or a house, I would be building it in my development company or my building company. Is that correct? Like it should be like, if so, would you, or because we're stacking up 1 or 2 sections that I know I'm going to have to pay income tax on it.
Yep.
So that will become my personal income tax. But she had a question with the GST side of things.
Who owns them is kind of irrelevant. It doesn't matter if it was you who owns them or a company. It's what you do with them.
Yeah.
So at the moment, they're just bare land. That's fine. There's no legislative requirements to be in the GST net or out of the GST net acquisition.
Yeah.
So if that's where you're at
zero
now,
rated, right? Yeah.
Was it zero rated?
Zero rated always.
No? Kind of quite different.
Sorry, no, you tell me. That's why I'm asking.
So are you GST registered?
My building company is.
So who owns the sections at the moment?
My private name.
Are you GST registered?
No.
Okay, so the land's then outside of the GST net. So it's
I'll
not.
just edit this. No.
So it's not.
No, I am not. I'm not GST registered.
Okay, so it's not zero rated. Zero rated is when you're both in the GST net,
and then you both agree not to claim on it.
Yeah. So the land, the 4 sections at the moment, all in your personal name, they're outside of the GST net. Cool. So that's fine. So the GST position depends on what you do with those sections.
Yep.
And that will also then depend on the GST treatment. So it's best if we just go back a few steps. It's best here, or I think it's really best if before you go and buy something, you have a really clear vision about what you're going to do with that property, whether it's land, so that way you can get the structure and everything set up from day one.
Yep.
So if you're going to build on them and then rent them out, that continues to be what we call a GST exempt activity. So if you're providing accommodation, residential accommodation as a long-term dwelling, there's no need to be GST registered on those.
Yep.
If you were to build them and then sell them, and you were to do that, that's likely to be a continuous and regular activity. So you will have to become GST registered, and then because you bought them when you weren't GST registered, you do something called a change of use adjustment.
Yep.
Or so you change, you claim the GST based on what you paid for them, and then you'd sell GST when you pay for them, and you'll be able to claim the GST on the cost as you go through it as well.
Okay. Oh.
So it depends.
Yeah. It does,
That's normally the answer in accounting. It depends, and sometimes like you hear all of these different stories around, oh, I didn't do GST or I didn't pay tax, but it all comes back down to like intention in the business.
Yeah. So what if I was wanting to make like 20 grand on like reselling the land or something like that? So if I picked it up for a better rate and then I wanted to just make a quick buck, if it doesn't put you over that 60,000, or how would that?
It probably would, because the full land is the taxable supply value. So if the section's 200 grand and you're selling it for 200 grand, then it's over 60.
Yeah. Turnover. Yep. Okay.
Yeah.
Well, there you go, guys. Like you see the man live in action.
It depends on lots of things as well there, because there's if you're a developer or you've got some development experience, I probably wouldn't put any other properties in your personal name as well. We'd probably have some trust that's just for buy and holds or just for your personal property, because with developers there's this other tainting tax rules that come along too. So
I'd love to hear more.
So when you're involved in a development company or a development or a land dealing, land building, land development company, while that company, I'm saying company, but while that activity is active, any other property that you buy, if you sell that other property within 10 years, even if it's a rental property, you have to pay tax on it.
Okay.
So there's, you want to be really clear around time frame, deadlines, and what you're doing and that kind of stuff too.
Yeah. Well, it can be a bit like that, right? Structure is a huge thing as well. Yeah. Do you have any questions for me?
How long have you been on your property for? Tell me a bit about that.
This?
Yeah.
So my first property, I bought it 2013. So I bought a ship box for $114,000 out in Ngaruahia.
Nice.
And I just sold it to my brother for 400 and that's actually 450. And that's actually a lot less than what it's
the market
worth.
Value,
yeah. So I sold it to him to help him out, to get him into the market, because he kind of was sitting there watching me do all of this. And I was like, when are you going to get your act together? He's my older brother. And I said to him, I'm happy to help you out. And so I sold it to him for cheap. And I only did that probably 6 weeks ago.
Cool.
So I had that. I never sold that. And then I done this development that we're currently in right now. Did that in 2018. So I did that, and then me and my business partner sort of split, and I didn't have enough equity to go, so that's why we joined forces, so that we could do it together.
Yeah, good partnership.
And then when he realised how tough it is in New Zealand and all the legislation and whatnot, he was like, okay, we've done all right off of this, I'm off, and he went over to Thailand to retire, which was a shame, because I would have loved to have carried it on, and it would have been, we would have actually hit a mean boom at like 2020, 2019. But so I've been in the property game. I was in real estate from 2015 to 2018, I believe. Yeah, and I've just always loved property, and I've always enjoyed it. And it's hard, because I know that's why I always, that's what I want to talk about. That's what I guess that's my narrative, if you will. Whereas I am kind of trying to diversify as well, and with our business, our coffee business, that's grown way more than I thought. Like, I just said to my partner when she first started, I was like, oh, go get a hobby or something. I'm gonna make it big with all my property and whatnot.
Do the banks like to see that regular income come through from the coffee stuff to fund the development side, or are they unrelated?
So that's the beauty of it. Like, that's probably because we've spent the last we just ticked over 5 years in business, the coffee business, which we're super proud of. But we were building that in the last previous years, which has actually allowed us to hold on to these 5 units that I'm building over by the uni.
Yeah, cool.
Which, if I didn't have this business, I would have probably have to do the same strategy I done with this development, which I would have had to pre-sell off the debt and then do it a bit harder. Whereas you probably even talk to Michael Wilson about this, is like, you're kind of doing a lot of work just to pay taxes.
Oh,
and
totally.
if you can hold on to it and you can have a strategy at the front of it, I'm planning on holding those for 10 years and hoping, not to pay tax on it, or if we do sell one, pay the tax on that.
Yeah, the worst we've seen, right, is we just turn around and tell one guy 62% taxes to pay after making this development. And it's like 62% how? Well, it was 39% income tax, 15% GST, 12% student loan. And it's just like arguably student loan is repaying his debt. But whereas now, if you're not a developer, but say it's a one-off project or something like, or rent it, if you just rent it out, do it to rent out, then there's no GST, and if you hold it long enough, no income tax. Yeah,
that's my strategy with it, and I think it's also a blessing that we have been working on that business, which has put us in that position.
It's probably taught you a lot of other business skills as well, I imagine too.
Yeah. I dabbled in a few other businesses, small businesses, failed at them. So I've always been business inclined,
Yeah.
and that's why when I started actually helping out my partner, it's it's like doubled and doubled and doubled ever since I've started helping her. Whereas it started as her hobby and it was just her little coffee cart, and she always tells me like, oh, like you're the one who wants this to grow. And she's like, I'm happy sitting on the side of the road making.
Yeah, but even skills like leadership or training the team or systems and all of those, like until you do them and put your like you got skin in the game. So yeah.
Yeah, well, I try to tell her, and maybe you can confirm it as well, is like if you're not growing in this economy, I feel like you will eventually be out of the business.
Oh,
like,
not in this economy.
Yeah.
Like over COVID, if you weren't growing, you've been left behind.
Yeah.
If you're growing in this economy, you're doing incredibly well.
Yeah.
Like our biggest clients have had their turnover slashed by 40-50%, and these are really good, strong commercial businesses.
Yeah.
So, I think it depends on industry and depends on geographically and what opportunity you're in. Obviously, if you're AI and you're not growing, well, something might be wrong. But if you're in hospo or retail or a trades business in New Zealand and you're staying stagnant or falling back 20%, I actually think that's bloody good.
Yeah. Maybe I'll rephrase it. If you're not getting better, I think that you're probably going to be heading backwards. I have a mindset of like, if you're not competing, I think I have the same mindset as there's plenty of business to go around. I also think if you're not good enough, someone better will come along and do a better job and take your business. And like that was my mindset that I try to iterate into the business, is like, hey, like how can we be better? How can we solidify the fact that we can be in business next year, the year after, the year after?
What's the long-term vision? How many coffee carts do you want to get to? Nationwide franchise?
I haven't actually said this publicly. Like it's only in conversations between me and my partner, but I would love to help people start in small business, and I would love to do some sort of franchise. So we just ordered a coffee roaster as well. So we're starting to roast our own coffee this year. So you haven't seen, but there's a cabin right out the back there, and this is going to be another part of the property that it's going to be soaking up. But
that home office tax deduction just got a bit bigger.
Yes, it definitely did. I tried to get my accountant to do my car parks, because I was like, well, they're taking up literally like 70% of my usable land. And but so the long-term vision is to have an international coffee brand. That's my vision. I haven't said that out loud yet, so
that's
now
everyone
can now everyone can hold me account to it.
Yeah, cool.
Well, I think I pride myself. I think we're fucking good, and we wouldn't be growing and hiring people if we weren't. And I'm pretty proud of what our team is doing, and I think we can do more if we actually sort of, like you're saying, remove ourselves and work on the business itself. We've kind of been the operators, and the way I think of business is I think we don't have a business, we have a glorified job, and I want to kind of mentor my partner into understanding, hey, we can become better leaders and then take a step back and then grow something. Yes, there's going to be teething issues. Yes, there's going to be small things that are going to go wrong, but that's how I think we'll grow as well.
100%.
Yeah.
So it's how you have to grow.
Yeah.
And if those things aren't happening, then you're not doing what you want to do. Like that's just part of it.
Yeah. And I think with the coffee business, it started off as I thought I discounted it myself, but now I can see what this is doing for us and what it's allowing us to do alongside with my property sides of things. It's definitely, that's why I'm excited about it. I think we can grow it. Everyone loves coffee. I think it's an industry we need to, we're quite safe in if we do a good job.
Yeah. Good stuff. That's awesome.
Yeah. Well, I've finished all my questions for you, mate. Hey, I really appreciate you coming in. You've got a plethora of knowledge, mate, I think we had a really good podcast. It was a good conversation. I'd love to have you come back if you're happy
absolutely.
to come back and shoot the shit and talk about accounting. I can jibber jabber all day.
I'll come back. You tell me you're in London.
What's that?
I'll come back and you can tell me you're all over the world in London.
I have a problem for not taking time off, and I think we need to turn that corner for me and my partner, because all of our mates just went overseas and she's just like, when are we going back to Fiji? But it's one of those short-term sacrifices. Like we're getting a lot of, I don't know, I'm kind of like a shark. I was like, oh yes, no one's growing. We are growing. Like this is the time to make the leaps, I think. I don't know. Might be wrong. But hey, thanks for coming in,
Thank
mate.
you. It's been great to meet you and great to be here.
Yeah, awesome. Cheers, mate. Thanks for listening, guys.